Welcome to readtheticker.com. Today I'm going to introduce the RTT Cycle Ease of Movement indicator. This is the indicator down here, and RTT members will know the RTT Cycle indicator, which is the blue line. I've just added to it the green and red bars. Now, the green bars resemble price moving up during an upswing. Red bars resemble price moving down during a downswing. Now, the idea is to be able to compare how well price moves during the upswing compared to other upswings. For example, here price moves up better than there, and price moves up better than this one here. And also can compare how price falls compared to other downswings. So the idea is to work out ease of movement. Behind the logic of this indicator is Wyckoff's law, effort versus result. Now, Wyckoff says that if you have good volume activity, you should have good price activity, and if you don't, that means something else is going on. So if you have good volume activity and prices only advancing a little bit, that means there's something else going on, might be selling going into the rally. So this here is a study of the price action to see how well it's moving to per wave. Right, now, for example, if prices are rising aggressively, that means traders are hitting the bid prices more so than the ask. And if prices are falling aggressively, that means traders are hitting the ask price more than the bid. Now, how to use it? For example, here we've got an upswing here, quite strong from the takeoff there. I think the fiscal cliff was resolved and it took off. And as you see, we have a little downswing here, but volume is equal to the upswing. But as you can see, there's no movement. So why is there little result? Why is there little result for the effort? It's simply because all the selling was soaked up by buyers. And obviously the next wave it took off here, but as you can see, it's only a mild advance. So that basically means it's only if the volume is okay and it's advanced. So what's going on here? It's because there's selling going on until it's advanced. For example, here price moved rather easily down, as you can see by the little red swing. And the volume was pretty substantial, so there was some definite selling going in there. But as you can sort of see, there was a movement up here, and as price and volume actually come back to the upside. So like I said before, this is a tool to help analyze Wyckoff's law, effort versus results. It covers the price action, and the volume can be studied on its own, or you can add other RTT indicators to help compare price and volume action. Okay, so here are a couple of examples. There we go. So here we have Google. This is the monthly chart, and obviously when you look at a monthly chart, weekly chart, or daily chart, you get more value from a monthly chart than a weekly chart, and more from a weekly chart than a daily chart, simply because there's less noise here and the swings show more of the forecast of the price. For example, here we had a big upswing, a downswing, an upswing that wasn't so bold, as of course the volume wasn't that great either, and another downswing. But as you can sort of see here, slowly the upswings in green are getting larger than the downswings in red. So the ease in movement in Google from about the 2009 low is very attractive. Even though it's been in a sideways range here, you can actually see the downswings and the upswings, and the ease of movement to the upside is a lot greater than that of the downside. And if you look at the volume patterns, you can see the volume is much larger on the upside than on the downside. So as you probably can fairly assume, you guess, a breakout from this large, massive ascending triangle, that $1,000 will be printed with Google eventually. Right, the next stock, for example, was Apple. Now, Apple had a very good story on the upswing from the March 2009 lows to 2012. As you can see, the upswings are all larger than the downswings, but here volume picked up and the ease of movement to the downside accelerated. As you can see, the first couple of bars here were equal to the sell-off here, and the third one just skyrocketed up. So when you have ease of movement of price falling and volume rising, there's just no one buying. I mean, they're just chasing the ask prices just to sell. Compare that downswing here and ease of movement to the sell-off just prior to 2007, 2008 financial crisis, We have lots of volume, right? Ease of movement, it was there, it was impressive, but not that impressive, because you can see with all that volume coming down there. So if all that volume's happening and the ease of movement's only mild, where's it going? It's being, people are buying it. People buying up the dip in Apple. So I hope you enjoyed the video. Thanks for watching.